For nearly 50 years after its inception in 1935, Social Security benefits were completely tax-free. But today, almost half of all retirees pay taxes on their benefits. Now, President Trump has proposed eliminating those taxes entirely. But what does this mean for retirees and for the future of Social Security? In this video, we'll break down how we got here, explore the potential implications, and discuss Trump's most recent comments. And most importantly, I'll share what you can do to prepare just in case nothing changes. Welcome back. If I haven't met you yet, my name is Christian Klassen, and I created this channel to help you make the most out of your retirement. So how did we get here? Before 1983, Social Security benefits weren't taxed at all. But legislative changes introduced something called provisional income, which determines whether a percentage of your benefits will be taxable. So what's the problem? Well, these income thresholds used to calculate this tax, well, they were never inflation adjusted. And as a result, this increased the number of retirees who have been pulled into paying taxes on their Social Security benefits over time. So when the tax was introduced in 1984 by Ronald Reagan, it affected fewer than 10% of retirees on Social Security. At the time, this wasn't a big deal. However, as the income thresholds, which are $25,000 for single filers and $32,000 for joint filers, these income thresholds, they weren't adjusted for inflation. And this tax now affects nearly half of all retirees, which was initially a tax on the wealthiest individuals, has now reached middle income retirees who never thought they'd have to pay taxes on their benefits. And this shift has made Social Security taxation a major issue. And that's why politicians, including President Trump, are trying to address it. Here's the big risk, though. If Social Security taxes got removed, that would get rid of billions of dollars in revenue annually. And in 2024 alone, Social Security taxes contributed $95 billion to the Social Security Trust Fund. The problem is this fund is already on track to be exhausted by 2034, unless there are some major changes made. And if those tax revenues suddenly disappear, this time frame could come even sooner. Now, to be very clear, Social Security won't disappear entirely, but reductions in your benefit might occur sooner than later. As of right now, the expectation is for a 20 to 25% reduction in benefits once these funds run out. So a $2,000 monthly benefit might be reduced to $1,600 unless Congress can figure out a way how to make up this lost revenue. Because not just Social Security is affected, but Medicare funding gets hit hard too. Check this out. This blue line indicates the current projected time when the Social Security Trust Fund will be emptied. The dashed line represents the impact of not taxing Social Security benefits anymore, which essentially moves the data depletion forward by roughly a year. And the impact of Medicare, which is this orange line, when we look at the dotted line, it represents the shortfall that could occur. And it could occur 6 years earlier. Knowing all this, what is Trump's proposal and what's his argument for getting rid of Social Security taxes as a whole? Well, his reasoning is simple, and whether you agree or disagree isn't the main point. But his argument is that people just like you have paid into the system your whole working life. Why should you have to pay taxes on those funds again in retirement? And while technically these are two different taxes going on, retirees understandably feel like they are experiencing a double taxation effect. So now for retirees, if this were passed, this could bring immediate financial relief, especially right now. Because again, almost half of all retirees rely on Social Security for 40 to 50% of their income. So yes, this extra money would be a nice bump in income for all who are impacted by taxes on Social Security benefits now. However, without a proposal to replace the lost revenues, again, we run the risk of depleting these funds sooner. So while tax-free Social Security may sound nice on the surface, it presents a very critical question. How do we compensate for the lost revenue? Well, for years, Social Security took in more than it paid out, building a trust fund of about $2.7 trillion, which is a lot. But now with 10,000 baby boomers retiring every day, the money flowing out now exceeds the money flowing in. So in an attempt to solve the problem of not running out of money, several possible solutions are being debated. Here are some of the pros and cons of options being discussed. Option number one, which is raising the Social Security payroll tax rate. Currently, employees and employers each pay 6.2% of their wages toward Social Security, and self-employed individuals pay the full 12.4%. So increasing this rate could bring in more revenue and extend the system's solvency. Now, here are the pros to this decision. One, it will increase funding directly and immediately. Two, even with a small increase, like 6.2% to 7%, it would generate billions of dollars. Now, the issues with this plan is that it would reduce take-home pay for employees now. It would also increase the labor costs for employers, which could impact hiring and wages. And lastly, it hits self-employed individuals the hardest since they pay both the employer and employee portion of this tax. Option number two is to remove the cap on taxable wages, which is $176,100 in 2025. Wages beyond this amount are not taxed for Social Security, so by raising or eliminating this cap would exclusively affect high earners. Now, the benefits to this decision is going to bring significant additional revenue. And two, it only affects the high-income individuals, reducing the burden on low-wage workers. The downsides to this plan are, while some of the businesses might consider compensation to non-wage income, like stock options, to avoid paying higher payroll taxes. High earners may resist paying more without getting higher benefits in return. And this alone still may not be enough to fully fix the funding gap. So the third option they're talking about is raising the full retirement age above 67. They might consider increasing it to 68, 69, maybe even 70. Now, this would increase how long people collect benefits, helping ease financial strain on the system as a whole. But I want to make clear, I don't like this option at all. The argument is that it's going to help with reducing the number of years benefits are paid out. And in theory, it encourages people to work longer, keeping more payroll taxes flowing in. But this is why I don't like this. It disproportionately affects lower income workers, especially those in physically demanding jobs who may not be able to work longer, as well as those with health issues that may have no choice but to claim early, locking them into lower benefits for life. And this decision could cause financial hardship for retirees who depend on Social Security as their primary income source. So while we don't really know what will happen in the future, each of these options that they're talking about comes with its own series of trade-offs, and removing Social Security taxes without addressing the shortfall would only accelerate the main underlying problem of running out of money. So what do you do until things change, or just in case nothing changes? While we wait to see what happens with Social Security taxation, the best thing you can do is to take proactive steps to maximize your benefits. So if Social Security remains taxed, and you're among the 50% of retirees affected by Social Security taxes, you run into what's called the Social Security tax torpedo, which means you could be paying more in taxes than expected, all because you exceed these income limits. And it's a common tax trap retirees face. So if you're not familiar with this, be sure to subscribe because I have a video coming soon on how to avoid it in case things end up not changing. And if you want to make sure you're on the right track, I have a How Much to Retire quiz linked in the description below to see if you're on track to retire and retire well. But in the meantime, understanding how Social Security works and making informed decisions about when to claim benefits can have a major impact on your retirement income. So if you want to learn how to get the most out of your Social Security benefits, check out this video right here. Thanks for watching, and I'll see you in the next video. Have a great day.